Warren Buffett, the Wizard of Omaha, with his crystal ball of money that seems to predict the future of the stock market, is truly a legend in the financial world. His extraordinary stock investments have turned him into an icon, someone almost worshipped in the investment community. Even at the age of 94, he remains one of the richest people on earth. So what secret helped Warren Buffett become a true financial wolf? Welcome back to Bull and Bear Academy. Today, we're diving into a grand financial feast filled with fascinating stories about the god of investing, the king of stock holdings, the man many say can move markets. Warren Buffett. Warren Edward Buffett was born on August 30, 1930, in Omaha, Nebraska, USA. His father, Howard Holman Buffett, was a well-known stockbroker. As a child, Warren was shy and quiet. His greatest joy was reading his father's financial books. From there, he gradually became obsessed with investing and business games. At just 6 years old, he began his first startup, selling Coca-Cola, chewing gum, and magazines. Month after month, he earned about $175, slowly saving up his first small fortune. By age 11, while other kids were busy buying candy and playing marbles, Buffett was already learning how to buy low and sell high in the stock market. His very first trade, 3 shares of Citi's Service Preferred at $38 per share. But right after buying, the price dropped to $27. He panicked. Convinced it was a bad investment, he sold when it rose slightly to $40. Then, the stock skyrocketed to $200 per share. That painful lesson stayed with him for life. Patience matters. By age 15, Buffett owned 40 acres of farmland and had saved $5,000. In 1947, after graduating high school, he felt confident, maybe a little too confident. He wanted to quit school and join his father's brokerage business, but his father insisted he continue studying. So Buffett attended the University of Pennsylvania, then transferred to the University of Nebraska to study business administration. Later, in 1951, he earned a master's degree in economics from Columbia University. After finishing school, he returned home to work at his father's brokerage firm. In 1954, he followed the bright influence of Benjamin Graham, the legendary investor who became his mentor. Buffett admired Graham so much, he even gave his son the middle name Graham. At Graham's firm, he absorbed knowledge and experience like a sponge, becoming unstoppable in the investment world. But every party ends. When Graham retired, Buffett, only 25, returned home with $140,000 in savings, ready to start a new chapter. He founded and managed his own investment partnership. His bedroom became the office. He raised money from friends and family. 7 investors contributed a total of $105,000. Buffett himself invested just $100. Using Graham's value investing strategy, he focused on companies whose market prices were lower than their true worth, even those that looked like they were about to fail. His rules were simple. Number 1, buy undervalued stocks. Number 2, own large stakes in companies he believed in. Number 3, hold investments for the long term, even forever. After just 10 years, the fund grew to $7.2 million. Buffett's personal share reached $1 million. Investors rushed in. His returns crushed the Dow Jones. By 1968, he managed $104 million. His fund grew nearly 30% annually, far beyond the market average. But sensing rising market risks, Buffett stopped accepting new investors. In 1969, at age 39, he closed the fund, holding $25 million. He was ready for something bigger. That next chapter was Berkshire Hathaway. Originally a struggling textile company, Buffett believed its stock was undervalued. He began buying shares and eventually took full control. Later, realizing textiles had no future. He shifted direction. In 1972, he bought See's Candies for $25 million, a decision that generated more than 8,000% returns over the next 50 years. Then came a wave of major acquisitions: newspapers, furniture companies, railroads, insurance firms, and more. It looked like Buffett was shopping endlessly, but his smart capital allocation built Berkshire into a powerhouse. By 1982, he ranked among America's 400 richest people. 3 years later, he became a billionaire. In 1988, he made one of his most famous investments, buying a massive stake in Coca-Cola. It remains one of his greatest successes. Over decades, he transformed Berkshire Hathaway into one of America's largest conglomerates, worth hundreds of billions. Its stock price rose from just a few dollars to tens of thousands per share. The most expensive stock in the world. Buffett's wealth grew exponentially. He became the richest person on earth in 2008, even after market crashes. His empire kept growing. Today, Berkshire owns dozens of major companies, from insurance to railroads to energy, plus huge investments in global giants like Apple and Bank of America. Despite his enormous wealth, Buffett has pledged to donate 99% of his fortune to charity. He even auctions lunches with himself to raise millions for philanthropic causes. Millions of investors around the world follow his value investing philosophy, achieving financial independence thanks to his ideas. We hope viewers of Bull and Bear Academy will also discover an investment strategy that fits them. Start investing early. Grow strong, grow big. And when you succeed, come back and tell us in the comments. If this video helped you, don't forget to like, share, and subscribe for more content. See you in the next video. Bye.